Okay. So one, the WISP have gone out. The WISP is the written information security plan. You have to have that signed to be able to get access to your software. So if you have not signed your WISP and gotten back to your home office, please make sure you do so. That is very, very important. You know, we all about compliance here and making sure that we are protecting our clients' information. That is one of our biggest jobs as tax professionals, okay? So check your emails for your WISP. If you feel like you don't see it, don't have it, or have not received it, please get back to your home office and they will get it to you ASAP. Okay. The WISP, we went over that. I think that was week 2, maybe, that we did the WISP. So let's make sure we get that signed. Um, the next thing, the school community. So whatever office you are with, you have access to a school community. That's SKOOL, and you would have been invited by whatever office you are here with. Please make sure you get in a school community. Make sure that you active. Make sure you're going through the courses. It's a lot of great information inside of the school community, and we're all in there as family. So each individual office is represented, so you can kind of get familiar with who is inside of your office, who you're going to be working with, who's knowledgeable in certain areas. um, we ask for different information like your social medias and stuff like that. So now is the time to really be active. I know that it seems like it's so early for tax season, but guys, this is like really the perfect time for us to be getting started. It gives ample time for you to get in, to grow and be comfortable. Like, you don't want to get into tax season and then you feel panicky or you feel like you don't know. This is the time to practice. This is the time to ask questions. This is the time to get comfortable. So please use this space, get into the school groups and get active ASAP. If you feel like you don't know what I'm talking about, what is the school group? Get with your home office again and they will get you the link and make sure that you get inside of there. Like, we have so many like courses. um it's only so much that I can teach in like an hour to 2 hours. So everything that is being taught in this space is even being taught in broken down even further: homework, assignments, marketing, like everything. So this just scratched the surface. So you have to tap in. And a lot of times you guys really want to do that on the front end so you can be prepared with your questions for class. But if you have not tapped in, please make sure you get tapped in. There is also, Nicolette says she need that. So whoever your home office is, Nicolette, they'll take care of you. We have the information in there about the CRM. So we've been talking a lot about processes. We've been talking a lot about gathering clients' information. So as we're getting leads, as we're meeting people, where are you storing this information? Because if you just meet somebody and you throw their number in your phone, you're not going to really remember them come tax time, or come time to wanting to market. So a CRM or some type of system where you're gathering clients' name, their phone numbers, their emails, something that holds that information where you can go back and then market to those people outside of social media is what you want and what you need. So we have a whole course inside of the school group that breaks down individual systems if you maybe don't want to use the CRM. But the CRM is a one-stop shop where you can do absolutely everything. You can do emails, you can do marketing, you can text people, you can host your website. Like, it's a one-stop shop for everything. So just depending on where you are, if you're totally new, if you're somewhat experienced, you may or may not feel like that's for you, but we still have a system that will just introduce you to individual systems or the CRM. Okay. So make sure you check that out. And when you get inside of the school group, if you don't see it, you can post a message and you can be directed directly to that particular course. Also, most exciting. So October 1st, we have been posting about a challenge, a marketing challenge. So we created a group that is specifically for this 30-day challenge. Some of y'all already responded and said that you were interested. If you are interested, you need to let your home office know tonight because we start tomorrow. Tomorrow is October the 1st and it's go time. So inside of this course, this is for action takers. This is not something that you have to do. This is something over and beyond just the regular courses. But we're going to be taking action every single day. So every day is going to be something to do from October 1st all the way up to October 30th, October 31st. That's Halloween, right? There are going to be action steps. And so it's not going to be beneficial for you to on the 5th be like, oh, I want to join, because we are already 5 days in. And if you say that you want to do this and you're not active, you're going to be removed, because we're looking for people who really ready to take off and who are serious about marketing, getting a business out there. And if you feeling like, I don't know what to do, like, I'm giving you the bike, I'm giving you the training wheels, like, but I can't ride the bike for you. So I know we all have a lot going on, but this is an exclusive opportunity. Like, being in this is a $1 billion space. And if you want to claim your place at the table, you have to take action. So nobody can't feed you. We just can prepare the plate, sit it in front of you, and you got to say, I'm ready to eat or I'm not. And it's okay if you're not ready. It's no pressure. But we just saying, if you join, we want you to be ready to take action. And if you want to be inside of that group, please let your office manager, the office that you're attached to, know, and we will get you in the group. We are kicking off tomorrow with smoke behind us. All right. Candace, did I forget anything? Leave anything off? I think that's all the announcements.
I believe that was all.
Okay. All right. So we're going to jump right into this lesson, y'all.
Do you want me to go ahead and drop the link?
Yeah, go ahead and drop it. Well, I'm sharing. So the link is going to be in the chat for the school if you're interested in the 30-day challenge. You interested in the 30-day challenge? And if you do miss the link for whatever reason, don't panic. Just let your home office know, but the link is in the chat. And try to remind me again at the end. I'll announce it and you can drop it again right before we get off, in case because people still coming in. Can y'all see my screen?
Yes.
Yes.
Okay. Sorry, y'all, because I can only see me. I'm about to cut my face off because. Okay. So this week we are going to be talking about income classifications. We're going to be talking about the Schedule C and client communication. First of all, though, I want to recap from last week. So quickly, how many filing statuses are there? How many filing statuses are there?
5.
Perfect. Can somebody quickly name what those five statuses are?
Single, married, or married filing jointly, married filing separately,
Mm-hmm.
had a household, widowed. Did I name them all?
That's
Yeah.
it.
Yeah, that's it.
All right, so everybody got that? We got 5 filing statuses, and I'm just recapping last week to see where y'all are, and what stuck. The standard deduction. I did plug in these numbers from 2025, so take note. So the number one thing we talked about last week with the standard deduction is this is our income threshold for letting us know if a person needs to file taxes in general, right? So if a person comes to you and they say, I don't know if I need to file, and you say, well, let me see your W-2s. For the single individual, if they made less than $15,000, they don't have a filing liability. If their filing status would be head of household, if they made less than 22,000, they don't technically have a filing liability. Married filing jointly, if they made less than 30K, they don't have a filing liability. And so single and married filing separately, the standard deduction is the same. You got head of household, you got married filing jointly, and then the number for the income for the widower would be the same as for married filing jointly, right? So although this is our basis for whether or not somebody needs to file, depending on what the person have going on, they may still can file, although they don't have a tax liability. Can anybody tell me an instance where somebody may make less than a standard deduction, but we would still file taxes for them?
Mm,
Go ahead, Ryan.
Unemployment.
No, not necessarily unemployment.
Oh,
Dependents.
Right. Well, that is one. So a person might have made 12,000 and they got dependents, so they would still want to file because they can still qualify for child tax credit and earned income credit. What's another one?
Would it be the taxes that they paid out?
Exactly. So a person
Right.
may have made like 10K and they technically don't have a filing liability, but they may have paid $500 or $600 into federal withholdings. They can get that monies back as a refund because they didn't need to pay that taxes. Okay. So that's two scenarios. A person made income, but they have kids, we would still file them. A person paid taxes and they don't have a tax liability, we can still file them, okay? Everybody clear with that? So let's recap some of our common tax credits. So we got the child tax credit, earned income credit, child independent care credit, American Opportunity Credit, lifetime learning credit. And I wanted to go back and revisit some of these because one, they're the most common credits, but two, looking at the income phase out. So sometimes people will say they know somebody in a similar situation as them, meaning, oh, well, I know somebody else who got 3 kids and they got back 7,000. Why am I only getting X, Y, and Z? So we have to look at the income as well. A lot of these credits, I'm sorry, are low income friendly.
I'm sick and tired of these motherfuckers
So
paying.
the they're low income credits. So the more money a person makes, the less of these credits they qualify for. So I just want you guys to kind of remember that and take note, because clients love to kind of come back and say things like, oh, well, my sister got this back, or, this, that, and the third happened. And you need to be able to explain the difference between their situation and what somebody else's situation can possibly be. And one of the main things, like the American Opportunity Credit and the lifetime learning credit, both of those are college credits. So high income earners, you see the American Opportunity Credit start phasing out about 80K. So if you have a single individual that's in school and they made 100,000, they're like, well, I went to school, this should be like $1,000 credit. They're not going to be eligible for it because they made too much money. Do we have any questions about any of the credits? So we covered this last week, but I just want to kind of recap so this can soak in for y'all. And if you are afraid to come off of mute because I can't see everybody at one time on here, Candace is in the chat and can answer any questions in the chat. Okay, so the other significant thing that comes with those credits is we talked about PATH Act last week. Do anybody remember the significance about PATH Act? Nobody?
Is it that you cannot receive a refund before mid-February?
Exactly. Who is this speaking, please?
Shay.
Good job. That's my girl.
Thank you,
Yes,
thank you.
that is correct. So normally, when people file their taxes, the IRS will say you can expect your refund anywhere from 7 to 21 days, right? So people can start filing as early as January 2nd. If somebody filed on January 2nd and they qualify for earned income credit, they qualify for child tax credit in 21 days, they're not going to have their refund. Okay. It is a law that they cannot get a refund before mid-February. So right here, the timeline, if y'all see my cursor, say February 15th. So it's normally sometime after Valentine's Day that those refunds will start being released. And this is significant because people file taxes every single year, but every single year feels like the very first time. You're going to feel like people don't do this all the time. People might make you feel crazy, like, So this is why we're going to get into bank products on another class, but this is why people do actually take advantage of getting those holiday loans and those advanced loans because their refund is going to be a ways away. Okay, so no matter how early they file, if they have earned income credit, child tax credit on their refund, they will not be dispersed or get their refunds until mid-February. Okay, and this is significant because people gonna call you and say, I filed, it's been 21 days, it's been this amount of time. It is no exception to the rule. This is an actual law. And they say that is to protect taxpayers, but it's really to give the IRS time to process those returns because these are the most widely abused credits, meaning people who should not be getting these credits or may not be eligible to claim them, claiming other people's kids, are taking advantage of this to increase their refunds. And so the IRS want more time to be able to go through these particular tax returns. Is there any questions about that? Okay, and so another thing with the PATH Act, revisiting the due diligence, we want to verify the eligibility. We want to make sure that we're getting all of the documents for every client. We talked about the relationship in order to be able to claim a dependent, making sure that we have all of the documents that relate to whatever credits are being claimed. So of course you're gonna have your IDs, you're gonna have your socials, you're gonna ask additional questions, especially if the children or the dependents are not biological. We're gonna be asking additional questions, and then we will be maintaining, keeping all of those documents for how long do we need to maintain our records as tax professionals? How many years are we technically responsible?
3.
Perfect. So
3 years.
I say 5 years actually, but 3 years is what we are responsible for. Okay. And as good tax professionals or great tax professionals, we're going to make sure that we are educating our clients about this. So even if a client don't ask you, you want to make sure they know. You want to explain to them. A lot of tax professionals don't really take the time out to make sure that people know things or educate their clients. They're just kind of like, okay, where are your documents? I prepared it. This is how much I'm charging you, blah, blah, blah. This is a big factor when building and establishing trust, especially as a new tax professional in the space. Clients definitely appreciate education. Okay, so tonight our main topic is understanding different income types. So we have earned income credit and we have unearned income credit. Earned income credit is basically anything where you are either trading time for money or you are providing a service or a product in exchange for payment. So we got payroll, wages, we got tips and gratuities. So that's for our servers, our bartenders. You got self-employment and freelance payments. You got business income. Unearned income would be interest from savings. So unearned income is meaning you didn't actually have to physically probably do anything to get this money. So you put your money in a bank account, it earns interest. That's unearned income. Dividend payments from stock holdings. So if you buy stock on Robinhood, it's a million platforms, Coinbase, all of those things. You didn't physically have to go in, clock in. You didn't have to provide a service. You bought something and hopefully in exchange you earned money. Unemployment is a big thing. It's unearned income, but it's still fully taxed. And then Social Security benefits. Sometimes people's Social Security benefits can become partially taxable if that person made a substantial amount of money over the threshold. So
Can
every
I ask
year,
a question?
yes, ma'am.
Sorry for cutting you off. With
It's okay.
the tax, I mean with the Social Security, does that apply with the ones that receive disability or is that just SSI?
So it's both because they shouldn't be I ain't gonna say they shouldn't be working, but it's shunned upon for them to make usually the cutoff range is somewhere between like 17 and 20,000. We have inflation now. So I don't know what the number is gonna be for that. But otherwise, for the most part, it's not taxable. But if that person is doing something on the side, if they work in jobs, it can be taxable. Did that answer your question?
Yes, ma'am.
Okay. So whenever we are preparing taxes for somebody, we want to know, did you receive unemployment benefits? Did you have a side gig? Did you have any investment accounts? Did you have any stocks? You will be surprised at the number of people who kind of forget about these things. So remember, guys, we are the experts. Don't just like when your client gives you their paperwork and stuff like that, then you go through it, then you ask additional questions based on what is there to make sure that nothing is being left off. Because people a lot of times will bring, especially if they come super early in the year, like if they come in mid-January, in January, beginning of February, a lot of times these are the people that's coming back at the end of February and March saying, oh, I got another W-2. Oh, I got a 1099 from Uber. Oh, this, that, and the third. So on the front end, if you ask them, did you do anything else outside of, let's say they worked a job, maybe they were a teacher. Okay, you were a teacher. Did you have anything else that you did on the side to earn money, even if you don't have an actual LLC or an established business? Okay, so we always want to ask that. Were you paid in cash for any work? All income must be reported even without official forms. What is the minimum income requirement for the self-employed to have to report? Who remember that from last week?
400.
That's correct. $400. So even if a person works a job and they said, oh yeah, well I did here on the side, but I ain't really make no money. I made probably about $2,000. The government want to know about it and they want their taxes off of it. Okay, so it's important to make sure we asking those questions. You just ask, did you sell anything online? Did you drive for ride share? That's Uber, that's Lyft. Provide services as an independent contractor. Even you as tax professionals, for 2026, you will be getting a 1099 for all of your earnings. You are independent contractors here in this space. Okay? So, one other thing too about the earned income versus the unearned income is that they're taxed differently, right? So a person can have um, investment income and not have any earned income and not be getting a refund, excuse me, even if they have kids. So in some prior tax seasons, you'll see people come like they might got two kids and they might have made $1,000 for the year. And they think they about to get like 5, 6, 7,000. They think they about to get all this money. That's not where the taxes are right now. That's not where we are in this space. If no income is gonna be no refund. So if you didn't make, I think like 2,500 or more, I think about 2,500 is almost like the baseline of the minimum that you can earn to see something, and that's going to give a very small refund even with one or two kids. And people don't seem to understand that. You got to have that earned income. Okay, so even if you got kids and you got unemployment, that's not going to reap you a refund. Do we understand the difference between earned income and unearned income and how that could affect our refund? Okay. Okay, so let's talk, hold on one second, y'all. Okay, sorry, y'all. I do have a 1-year-old. Um, so let's talk Schedule C, business information set up and essential business details. So anytime a person has any of this additional monies on the side, so if the person has a 1099 because they did like ride share, some nurses and medical professionals get 1099. Any income that is reported on a 1099 will trigger a Schedule C. The business income, even if you do not have a 1099 and you don't have an official business and you just have income on the side, this information goes on a Schedule C. A lot of times people will say, well, can you do my business? Or I didn't file my business. If the person is a single member LLC, that information goes with their personal taxes. So the 1099s, anything they did on the side, if the person babysitted, if they did hair, if they made bracelets, if they sold hair, etc. All of this information is reported on a Schedule C, and that goes with with the same tax return that the W-2 is reported on. So if the person does not have, let's say somebody say, okay, well, I babysitted for the year, but I don't officially have a daycare. If they still have proof of those earnings where they took Cash App, they took Zelle, they took Apple Pay, they can put this information in under a sole proprietor and claim that information. So if you have a person that say they didn't work all year, but all they did was babysit, they got 2 kids, they made $15,000, they can claim this information and the IRS will acknowledge it. If the person does have a legitimate LLC, then the things that we need to collect from that person, one is what is the business name? Get the employer ID, or what is called the EIN. Know what the genre of the business is that the person operated, and get a description of the business. This is significant because as the tax professional, we have to make sure that the expenses that the people or that the person wants to write off are ordinary and necessary for that particular business. So if, for example, what is, so a person that does hair in their home, it would be kind of unrealistic to say, well, they had 10,000 miles on their car. They do hair at home. How can you justify them having 10,000 miles for their business? So we need to know and we need to ask questions. So if the person is a sole proprietor, that information just gonna go under their name and their social, and we'll gather all of the other information about their business as far as how much did they make, how did they take payments, what expenses they had related to that. So if you braid hair, do you supply the hair? How much money did you spend on maybe like aprons and clips and advertisement, things of that nature? All of the expenses related to the business need to make sense. So we got gig economy, which is ride share drivers, delivery workers, platform-based service providers. They typically receive a 1099. Now, if a person doesn't earn more than $600, there is no legal liability for the company that they work for to provide them with a 1099. So if you have somebody who maybe did Ship, or they did Lyft, or they did Uber, but they didn't make over $600, they're not going to get a 1099, but they can still claim that information. So even if they worked the job and then they said, well, I did Uber some and I went on there and they said I made $565, you can still, they still need to report that income and whatever expenses they had associated with it. You have freelance services, writers, designers, consultants, other professional services providers working independently. And then you got, we in this age of digital products, people selling stuff online. So online sellers, craft makers, small retailers who sell physical goods to customers. So even if a person does not have a LLC established through the Secretary of State, but they can show that they made money, they received payments in exchange for services rendered, we can claim that information for them on their taxes. Do anybody have any questions about that? Okay, so again, all income must be reported. Income sources again include 1099. So anytime a person has a 1099, once you plug it into the tax software, it's gonna ask you, do you want to carry this to a Schedule C? And you will say yes. Once you carry it to a Schedule C, then everything else will come up for you to enter in the business name, the EIN, if there was any additional income outside of what's on the 1099, and then to list out the expenses. If the person said that they took payments, you would want them to be able to send you their PayPal, their Venmo, their Zelle, their Cash App, to be able to send you those statements as proof of payments. We are not investigators, but it is our job to prove that we ask the right questions. So a lot of people know that with Schedule Cs, especially if you work a W-2 job, this is a sweet spot that can really help people maximize their refund. So in the event that this is what it is, we need to have proof that this person showed us these things, provided us these things. And you will have some people that will say, hey, I just be trying to get my money. I mainly accept cash. But does this person have a social media? Do you see where this person is marketing, showing themselves doing hair? Do they have a booth? What other proof, even if they said, well, I didn't keep good records, what else do they have to support that they are genuinely in business and not just telling you something? So the IRS requires reporting of all business income, regardless of whether you received the actual tax form. Missing forms does not eliminate the obligation to report your earnings. If you do come across a client who is not keeping good business or bookkeeping, it is your job, your responsibility to educate them, advising them on either making sure they're keeping a ledger, making sure they get in QuickBooks, making sure that they're moving forward in a way that makes them look like a legitimized business. So even my clients who don't actually have an LLC, I tell them, go ahead and get you an LLC and establish it. Go ahead and get you an EIN number. This legitimizes your business. Go ahead and set you up a website or a landing page. All of these things make, if you get audited by the IRS, makes you look more legit than you just saying, I didn't know, or I didn't do this, or I didn't do that, because they can go in and take away credits that you received in the event that you cannot prove these expenses or you cannot prove this income. Any questions about that? Okay, business expenses and deductions, deductible business expenses. So again, we getting back to, depending on the genre of business, when an individual is writing off expenses, does this make sense for the type of business that the person has? So I'll see stuff like they might say, well, a person had a business, the business didn't make any income, but the person paid $5,000 in charitable donations from their church. If the business made $0, how can you explain that you got a write-off on the Schedule C for $5,000? That's from the W-2 income. That wouldn't be from the self-employed. So we want to make sure that the expenses and that the information that we get from the client is making sense. So tonight we just really talking about what's necessary for the Schedule C, collecting this information. But when we get into software training, you're going to actually see how we plug this information in and what it, what it looks like. But right now we're just in the collecting information stages. Does somebody have a question? I don't know if maybe it's just somebody not on mute. Okay. So special deduction categories is vehicle expenses, business meals, home office. And we want to make sure that we understand what write-offs we can take for the different businesses, but also like the business meals, that's very common. And we live in this age where you got Instagram and you see people posting and putting stuff all of the time. But make sure if you're taking um advice or things from there that you understand how it works, because you'll see people say, well, business owners, we don't take vacation, we take business trips. But at the end of the day, you have to be able to tie it back to how was this related to business? Just because you operate a business does not just mean your vacation is a business trip. The IRS wants to know who you were with. They want to know the who, the what, the where, and the why. So if you go out to dinner and you spend $200, and it is possible, you can write that off as a business expense. Maybe you're meeting with a mentee and y'all strategizing. We going over training topics. And we're there. That can be a business expense. But just to say, well, you was at lunch with your best friend and you took a business call, so now your $200 lunch is a business write-off. That's not gonna work. So make sure when people are giving you expenses that it makes sense, one, for the type of industry that they're in, and two, they can actually relate it and tie it back to business. So the IRS will actually want to see, okay, well, where does the receipt at? How much did you spend? What were you doing there? Who were you with? And then the other thing with the expenses in the Schedule C, we have two methods. So we can either take a percentage. This is relating to the home office. So the person can either write off $5 per square foot up to 300 square feet, or we can take percentages. So like a person can write off a portion of their rent, a portion of their utilities, if they have a home office. So if a person has a home office and they say, well, I work from home about 35% of the time, you can take how much they pay in rent yearly times that percentage and write that amount off. Or you can take that same information times the square footage, $5 per square foot, and write it off. To me, I personally use percentages, but some people do like the square footage. Now, not everybody will have a dedicated workspace. So if they don't have a specific space that's allocated for work or their business in their home, then you need to do a percentage versus the square foot. And a lot of times people just don't know the measurements of whatever room or space they use. And again, we want to make sure that we're collecting as much information from the individual as possible, whether it's bank statements, cash out statements, Zelle statements, invoices, receipts. If they have QuickBooks, we want a copy of all of that. Y'all still with me? Because it's quiet in here tonight.
Yes, I'm still here.
Yeah, we here.
Okay. All right. I'm just checking y'all temperature.
Here, I'm here.
Okay. Y'all learning something tonight?
Yes, I'm learning.
Yes.
Okay.
Ma'am.
Anybody got any questions so far?
Yes,
Okay.
a lot to digest.
Okay. So again, like we just getting the information that's going to be required for the Schedule C. And then the next time we talk about the Schedule C, we will actually be looking at it in the tax software. All right, so in October, the P10 application is gonna open. When everybody get their P10s, y'all gonna be put into the software. We'll be doing actual software training. We'll be getting into practice scenarios. So just trying to give it to y'all in pieces. And then we're gonna put it all together. All right, I'm almost done. Hold on. So let's talk about compliance and red flags and common audit triggers, right? So if a person is saying that they made money, it's from a business, it's almost impossible to operate a business and have zero expenses. So guys, if you have somebody, and some people you're gonna have somebody that say, oh, I made 12,000 and I got 2 kids, and they're not gonna write off all their income because at $12,000 income for the year with 2 kids, if you start writing off expenses, the refund amount is gonna actually drop. However, if you submit a Schedule C for a client and it come through for review, because we review whoever is your whatever office, we actually transmit to the IRS. We actually review every single return, because at the end of the day, it's under our EFANS. We're held responsible for what you are transmitting, even though your P10 is on there. I'm gonna say, hey, this not gonna work. Because if you did hair or you sold clothes, or I can't really think of any business that would have zero expenses. So they might can have very small expenses because that's a very small income, but having zero expenses on a Schedule C, that's real red flaggish. Okay. Excessive deductions can be very red flaggish. So again, we want to make sure that the income is ordinary and necessary for whatever genre of business the person is working or that they have. And I have had clients that did have really large write-offs, but as long as they can prove it to me, I'm okay with it. I'm okay with it, and I do educate them. I will let them know, although this is legit, this is red flaggish, and I will be there to support them in the event of an audit, because I know that I've done my due diligence. I know that I have the information. I know that they can back that up. But sometimes it's legit, but a lot of times it's not. So people who I do a lot of taxes for, like medical professionals, for lawyers, for nurses and stuff like that. So if you make a lot of income and then you have a Schedule C, that can really maximize your benefits or reduce the amount that you owe. So we definitely have to cover ourselves and make sure that the math is mathing. Miles. So people will say, oh, well, just put something in there, or whatever like that. But the client needs to have a tracking of where do they drive to. So got a lot of people who do home health. If you do home health, you go and see the same clients every week. What does that look like when you leave from your house to get to their house? Where is that? How many days a week are you going to see this person? So even if they don't have a log, there are still questions that you can ask to make sure that you kind of help them reconstruct that information. And moving forward, you want them to make sure that they get an app that will track miles. But again, you want it to make sense. So somebody who don't never really leave the house, who running a business, if a person selling digital products, we're not gonna put that they had 50K in miles for the year. So we gotta make it make sense. Repeated business losses, multiple consecutive years of Schedule C, losses may trigger a hobby versus you operating a business. So the IRS basic rule, you get about 3 to 5 years. And it's not a guarantee that if you had a business for 5 years and it took a loss, that it's going to be an automatic audit. But if you are doing taxes for somebody, they got a Schedule C. One, you do want to see, do they have access to their previous year tax return, so you can kind of see what was wrote off, especially if this is going to be your first year helping them. For my experienced tax professionals, you want to take that time to educate a client, because if you're saying, okay, well, I've had kind of a significant loss for the last 5 years and now you're getting audited, the IRS is like, is this a business or is this a hobby, or are you just trying to take these losses to lower your taxable liability? Okay, so as long as your client stuff is intact, you ask the right questions, you don't have to be afraid. But I just want you guys to know how to move and make sure you are covering yourselves. And if we are reviewing your schedule season, we're coming back and asking you things, this is just why, from experience. Any questions? And this just talks about the self-employment tax impact. The self-employment rate is 15.3%. The adjustment factor is 92%. Social Security tax will be applied up to 160,000 for a person that has self-employment. So moving forward, I want business professional development actions. So mindset building, right? How many of you guys are terrified to do a Schedule C? Right. Where the chat at? Has anybody been feeling intimidated or like try to shy away from the Schedule C because maybe you didn't understand it?
I am a little, but I got a little confidence in it.
Okay, so what's been your concerns in the past, or have you actually did any?
I haven't. That's why I'm concerned.
Okay, so has it just not come across your table, or do you feel like you try to avoid it, or maybe you just don't take those clients?
I avoid it.
Okay, so now you in a space where you don't have to avoid it, you just have to understand it. So Ryan, you said I make it work. What does that mean?
Long as I review it, I think I'll be all right.
Okay.
As long as I go back over it, I should be cool.
Okay.
Can I come in and say something real quick, Essence?
Absolutely.
I just wanted to say about the Schedule C, a personal experience. Everybody's different, and I want to say every customer is different too. But I find the most complicating part of the Schedule C is getting the damn expenses out of the people. Excuse my French, but I'm just being honest because like it's like they'll either overinflate, they underinflate, they don't understand the question. But that's where your job comes in. So you can make clarity for them and you can understand to them like, oh, you can claim this, you can claim that, you can't claim this, you can't claim that. That has to me has been the most complicating part of the actual Schedule C process because you do have to break down to several people. But then after that, after you've had them for a year or so, they come back to you, they're ready. They know, oh, I paid this on the light bill. Oh, I paid this on the water. I spent this on hair expenses. Or, whatever their business is. But it does get easier in time. Don't ever be intimidated by it. It actually is not any more difficult than a W-2 return, a 1099, which is essentially the same thing. But don't ever be intimidated because I promise it's not as hard as it seems.
Yes, Kara. That's good. That's good. And so that would be the thing, because you may ask somebody, we ask all the time, well, how much income did you have? And they gonna start telling you about how much money they spent on expenses. Like, people don't be understanding the difference between the income and the expense. So, guys, you are the expert. If somebody is coming to you, they don't know. So you don't have to be afraid, because they really don't know. And you are surrounded by family and by leadership that can help you and walk you through it. So you have the foundation now, and we're just going to grow from there. So don't let this intimidate you, okay? So I would like for you guys to visualize yourself confidently completing complex tax returns. Write down what professional success feels like to you. What type of clients do you want to serve? Like, you don't have to do people with businesses, but you do got to ask that question. Did you do something on the side? Do you have a business? So you do have to ask that question. So how can you become more comfortable in this space if this is somewhere that is not comfortable for you? I want you guys, so every week, we giving out marketing tips, we giving out suggestions to make y'all posting and moving forward on your social media comfortable for you guys. We are in the 4th week. So it's a lot of valuable information here. I would like for you to take a tip away from tonight and begin to position yourself as a knowledgeable tax professional. So just think, if you learn something tonight, what is it that you can teach or show another individual? What can you be? You can just basically share what you learned tonight and teach somebody else something.
Can I say something?
Absolutely.
I would also, and this is what I've done with previous clients too, is if they're unsure about the company, or they're unsure, like, hey, I got this 1099 from this company. I thought I was getting a W-2 from them. I don't understand why I received this all of a sudden. Do some research on the company, because they might have different laws that apply in different states. They may have traveled, did some what you call like work over in, let's say, Oregon, but you come back to Washington State and they're not contracted the same in Oregon as Washington State. So that's why you thought maybe you were getting a W-2 over there, when really it's only for Washington State, or it's only for Oregon if you do sales or whatever in a 1099 situation like that.
Thank you. And who is that speaking? I'm sorry, I can't see.
Ian.
Okay, thank you, Ian. Yes. And that is good. And that's rare, but normally it works in people's favor when they get a 1099 actually, and they wasn't expecting it. So a 1099, guys, just means that the income, the monies that the person received has not been taxed, and now it's time for them to pay taxes on it. It doesn't always mean that they're going to owe. It just depends on what the situation is. If a person has a 1099, they don't have a W-2, they don't have any dependents, they're gonna owe or they're gonna break even, depending on the write-offs that they have. Okay, so your $1 million tax career starts now. So we've been talking about elevating since training 1. Since week 1, basically. We've been talking about mindset. We've been talking about marketing. We getting into the meat and potatoes of everything. We stepping it up. Starting tomorrow, we have the challenge, the marketing challenge. So if you were late joining, we did talk about that, where we have an exclusive group for anybody who is up for a 30-day challenge. You do have to be active to maintain in the group. We want you to, Candace, you're gonna redrop the link for the school group for the 30-day challenge.
It's in there.
Okay. All right, so if you got on late, but you're up for a good challenge to spend the next 30 days to really grow your tax business, to really grow in this space, to kind of discomfort is where we grow. So if you're ready to step up for this challenge, I want to see you inside of the school group, and you got to start tomorrow. You got to start tomorrow. You can't say, oh, well, I got this going on. I got that going on. This is an exclusive opportunity in an exclusive space, right? So you got basically a couple of months to make a significant amount of money, and it can actually be life changing just depending on how much you want to commit to it. So I know that some people say, well, this is hard and I have this to do and I have that to do. But the truth is everything is hard, right? So I have a 1 year old, I have a 14-year-old in high school, um, operating multiple businesses, um, just like a whole lot going on. So it's hard to be in the space where we are. It's hard to not have time with our kids. It's hard to not to have to tell our kids no because we can't afford certain things. It's hard sometimes to stay awake when we want to go to sleep. We feel like, oh, well, I didn't work all day. These people didn't get on my nerves. I just want to get me a glass of wine and I want to go to sleep. But you can't have results and have excuses. So in this season, if you want the results, we pushing our excuses to the side. Okay? We giving y'all the exact blueprint on how to be successful in this space. So I want to make sure the link is in the group for the school. If you have any questions again tonight about the information that we went over about the Schedule C, let's talk about it. Don't be afraid to come off of mute or go into the chat space. Candace is there. You guys are now business owners. So sometimes getting out of, if you work the job mostly, a lot of people, if you kind of in an entrepreneurial space, you already kind of always had it. You probably did something, whether you, I don't know, sold hair, babysitted, sold candy as a kid. Like if you are an entrepreneur at heart, that's in you. But sometimes being an employee can be comfortable. And so we kind of get in that space and we get comfortable, but nothing grows in our comfort zone. So I'm looking to see who is going to step up. We looking to see who is gonna really grow in this space. Our team is growing every single week. So we got actionable application. Immediately identify one client or personal finance scenario which you can apply a newly learned tax strategy. Action trumps contemplation. Don't think yourself out of it. Don't talk yourself off the cliff. Network and mentor. I want you guys to get active in the school space. We are all there. So whoever is, whatever office you are attached to, it's other individuals there. One of the main things we've been trying to get you guys to do is share your social medias so we can support you, so we can, see what you post and help you be active. The more that you get around people that's doing what you're doing, you're going to become more comfortable doing that. So if you just still kind of hanging out with your friends that want to go to work, you got to start hanging out with your new family who are entrepreneurs who going to make a lot of money during tax season. I need to come back so y'all can see my face. So y'all can get with y'all family who gonna make a lot of money during tax season. So have you heard that you like an average of the people that you hang around most? Like we're family here and we have the same common goals. So now we're ready to grow together. So every week we're going to continue to grow. So we got 2 more weeks for the live training, but the education is going to continue. We're going to get into the software training. We're going to be getting more into marketing. Then we're going to be getting more into the systems. So as long as y'all willing to execute, we got the blueprint. We got the blueprint, right? So I mean, that's pretty much it for tonight. Do y'all have any questions, any concerns, anything?
I do have a question, and I apologize that I didn't know the answer already. What all entails a 30-day challenge?
So it's just gonna be an actionable challenge where you're gonna have to do different things every day. So the first thing is for you to go to your business page, if you have it, or your personal page, and capture a picture of your analytics. So you looking at, make sure you're in a professional mode, and then looking at where your analytics are, and you need to screenshot that, and you're going to drop it in the chat. And then every day we're going to be taking actionable tasks. So it's not going to just be like, wake up and tell Essence hi. It might be creating a flyer. It's gonna be direct though with what you need to do, and you just have to do it. So you might have to do it after work. You might have to do it early in the morning, but you just need to be committed. And we're gonna be sharing what we're doing in this space, and we're gonna be sharing how our analytics is growing with our page, which means your engagement is going up. You are being seen more. You most likely are going to be building your leads and growing your clientele. And it's going to be straight for 30 days. So like if you miss like 2 or 3 days, you're going to miss a lot. It's going to be too much to kind of just try to catch up on.
That sounds actually very exciting.
It
Okay.
is. It is. So we ready for people who want to take action, who want to take action. So it's no pressure. It's no pressure. It's not for everybody. But if it's for you, get with whoever has invited you to this space, and they will get you into the group. And tomorrow is go time. We into fall. I think I talked last week about, we got fall festivals, we got football, we got Halloween coming up, we got trunk or treats, we got plenty of opportunities where we're gonna be around people just having a good time. But let's turn that good time into some money. Like I'm here for a good time, but I'm also here to network and to work and get leads and to build my clientele.
Thank you.
Absolutely. Anything else, Kara, Candace, Rave?
No, ma'am, you did a wonderful job as always.
Perfect. Thank y'all. Y'all gonna give me some flames tonight. Give me some energy, because y'all kind of just had me up here like I was talking to myself, when nobody off mute with me. I mean, off on camera with me.
That's because you were doing an
Giving us some good,
amazing
you was
job.
giving us some
And don't
good
be
knowledge.
laughing. All right, and y'all get in those school communities. All this courses, like it's even more broke down about the Schedule C, the 1099K. It's a lot of information, like so much that I can't just squeeze all in here without having y'all here all night.
Oh,
So
I did want to add something, if it's okay.
absolutely.
If you have any of your clients that is interested in getting an LLC, I have a separate company where that's all I do is get their business up and running. Or I can show you how to do that so that way you can help your client.
Y'all better get with y'all family. It's so many people in here that have skills and have things that you connected to, but if you just sitting back and feeling like you by yourself, you're not gonna know. So I'm telling y'all, network, get into school, talk to each other, post y'all stuff, share your social media. What are you not sharing your social media for? Like if you sitting back thinking like you having questions, it's like 30 people on here that you can relate to, that you can talk to, with somebody else that feels exactly how you feel. Y'all, let's grow. Let's grow. It's time. Y'all here for a reason. this season, I'm telling y'all, it's time. Whatever brought you here, it's time, and you in the right space at the right time. All right, and Nikhil, she's out of Ohio. A lot of people out of Ohio. I'm originally from Ohio, from Cincinnati, but I live in Georgia. But we got people from all over the West Coast, the East Coast, Florida, everywhere. So yeah, let's somebody say Ohio. Yes. So let's grow. So if all hearts and minds is clear, I ain't gonna keep preaching to y'all. I'm gonna let y'all go with some stuff in the chat. So I'll let y'all look in the chat for a few minutes. And otherwise, I'll see y'all next week or see you in school tomorrow.
Essence, I have a question for you
Yes, Miss Kendra.
because I'm new here and hi family. Um, I just want to get caught up on everything, so I'm up to speed with everything that you went over today. Is that in the school?
Yes. All of the
Okay, cool
courses
beans.
that up in today is there. So you can go ahead. I sent you the link before class. I know it was kind of close to class getting started. So go ahead and complete it and I'll let you in and you can take a look around and then we can touch base tomorrow.
Okay, cool beans. Thank you so much and good night. Everyone have a blessed one.
Good night. Y'all check out the chat.
Nicolette, can you post your information so we can reach out to you, please?
I think she put it in the chat. Nikhil, I think
Nikhil.
Oh,
Nikhil, my
I
bad.
will. Yes, I will. Sure thing.
Okay, thank you. I just want to say real quick, I enjoy everybody's energy, and I love just even with Nicole posting the LLC connect that she has, or the business that she has, if you will. That's just type of energy that we bring to the table with everybody. We try to keep everybody connected, motivated. Anything you need, please don't hesitate to ask. We are here to make sure that you succeed and you have the most successful tax season that you can.
absolutely.
Thanks y'all for having me. I appreciate it.
All right, y'all. Good night.
Good night,
Good night.
everyone.
Good night. Thank you.
Good night.